Singapore Property Price Index has risen by 18% since 2020 and shows no sign of slowing despite interest rate hike and inflation. Since June 2020, HDB has grown by 23%, while non-landed private condominium grew by 18%. Hi, I'm James Lim, founder of the Property Plus system, and today I shall be talking about the current Singapore market and why people are buying properties despite rising interest rates, inflation, and high property prices. So why is HDB price consistently increasing? The rapid rate of price growth of HDB resale flats was due to the combination of a few factors. The supply chain disruption and lockdowns due to the pandemic has led to shortages of materials and manpower in the local construction industry. As a result, the construction of HDB flats was disrupted and delayed. Before the pandemic, most applicants of HDB or BTO flats would expect to receive the keys to your new flats about 3 to 4 years after they applied for your flats. The disruption in the construction industry extended the wait for BTO flats to be beyond 4 to 5 years. Some HDB home buyers who could not afford the long wait chose to buy completed HDB flats from the resale market. This led to a sharp increase in the demand for resale flats. About 31,000 HDB resale flats exchanged hands last year, which was 25.3% more than the number of resale flats transacted in 2020. As the stock of available resale HDB flats is limited in the short term, prices increased as a result. This caused a spillover effect as sellers who sell your HDB need to buy a property. Hence, they will turn to the private condominium market, which in turn causes the demand for private properties to increase. As a result, the increase in pricing since the pandemic is 18% growth from April 2020 to July 2022, a continuously 23 months consistent increase. HDB, on the other hand, grew by 23% over the same period. Therefore, people are buying properties due to two reasons. Number one, the need for property after selling off your HDB, and the hedge against inflation. Now let's talk about some theory. Looking at the opposite, what happens during an economic crisis? During a recession, businesses and consumers stop spending, hence money stops flowing. In order to make businesses spend more, the federal bank will decrease the interest rate to near zero in order to encourage spending. Government, on the other hand, will also spend more on construction projects so as to stimulate the economy. This is called the multiplier effect, which will cause other businesses to spend, like the construction industry and also the banking industry. However, right now, with increasing interest rate, it is the exact opposite. The federal bank, in order to curb inflation, want businesses, banks, and consumers to spend less. Hence, they will increase the interest rate. Overall, over the last 10 years, we have been enjoying super low interest rate of below 2%. You may ask me, so if interest rate is rising, why are people buying properties? Singaporeans are getting smarter and smarter. They know that it is better to put your cash in assets right now rather than holding on to it during inflation, as your money will be worth lesser and lesser. With the supply chain disruption, China's COVID frequent lockdown, and the Russian-Ukraine war, it is a bit dangerous to put your money in stocks and funds. The New York Stock Exchange has fallen more than 16% this year, and Bitcoin has fallen 250% from the peak of 70,000 to 20,000 now. Therefore, Singaporeans are buying properties right now mainly to hedge against inflation. Not only do we have a politically stable environment, Singapore land is limited. The demand is still strong, yet the government is not releasing enough land supply for sale. With increasing manpower and rising material costs and also demand far outstrip supply, we know that property prices will continue to increase. But are these buyers concerned with the rising interest rate? Well, not so much for two reasons. Firstly, interest rate has been very low, below 2% over the last 10 years, and interest rate has hit up to 7% before. It is also not uncommon if you look at other countries that interest rate is generally around 8%. Secondly, with properties, we pass on the cost to our tenants. The chart shows the percentage growth of condo rental prices versus the percentage growth of condo prices in Singapore. What is interesting to note is that the rental prices rarely move between 2017 to 2020 before taking an upward trajectory this year as interest rate increased. Hence, by investing in a property, you hedge against inflation, but you are not affected by the rising interest rate due to you passing on to the cost to the others. In conclusion, I want you to think long and hard what you should be doing with your money. Here are your options. Should you keep it while inflation is happening, which will cause your money to devalue? Or should you invest in an asset? And with so much uncertainty right now, which is the best form of asset? I always say, follow what the rich is doing. If you see the rich are buying properties, just follow them. Of course, not all properties are created equally. I have developed a system called the Property Plus system for my clients to select the best properties that have the highest potential growth. I have made these cards based on this system, so if you want them, just drop me a private message and I will send them to you for free. And if you see value in this video, give the video a thumbs up or click on the subscribe button below to be notified of future videos. It really makes a big difference for us. I hope you like our video. Thank you so long and see you in our next video.